JP Morgan just dropped a bombshell stating Bitcoin is set to outperform gold in 2025. That's right. Wall Street's largest bank is leaning heavily into digital gold, and it's not just talk. With global liquidity rising and liquidity shifting, they're betting big on Bitcoin. And if you've been watching the charts like we have, you already know that the setup is aligning for something massive. We got a little bit of a bull run meter that we're going to talk about. We're going to throw in a little bit of Elliott wave. You're not going to want to miss this. I took my methylene blue this morning. I'm got my Palpatine rush going. Stuff's better than Red Bull. I suggest anyone get some of it, but check with your doctor first. But anyway, welcome back, crypto crew. It is my boy. It is your boy Tom here, my boy, and your boy Tom here. If you like what you see, please give us a like. Make sure you hit subscribe if you haven't already, and make sure you follow us on X, where we talk about crypto and Bitcoin all day, every day. Okay, let's zoom out for ad nauseum. Okay, just for you, those of you that are maybe new to the channel, you don't understand like M2 concepts, we're going to be talking about it because Bitcoin has a history of lagging global M2 liquidity. Now, central banks turn the money printers back on. Bitcoin doesn't spike right away. It usually takes 6 to 12 months before that excess liquidity trickles into risk assets. We've been saying it all along. It is what it is. So we're looking probably at, I would think, mid-June, beginning of June, mid-June, before this really spark actually ignites and sets the coin up. But guess what? M2 has been quietly stable at the moment. So that was a little bit of a concern. However, it's starting to rise again, especially in emerging markets and Asia, especially. So that's the early signal. We saw this in 2020, and we're seeing it again now. Why Asia is doing the same thing that the G7 is doing. They're basically adding liquidity, trying to spur economic growth. But really, you need economic activity for economic growth. So we'll see how that plays out. But they're still definitely going to add money to the system. We don't need the Fed. We don't need the Fed. We got the whole world adding money to the system. So let's break down the chart. Let's go over to the daily chart. Now, what we got going on in the daily, pull up a Bitcoin daily with me. Right now, we're seeing a hidden bullish divergence between price and RSI. Price made a higher low, but RSI printed a lower low. Now, this is basically a classic hidden bullish divergence. It's usually a trend continuation signal in an uptrend market. So the market's way of saying, look, momentum's cooling off, but smart money's accumulating behind the scenes. Now, I showed you yesterday an indicator called the average true range. That's a great indicator as well. It's very, it's probably just as good if you're a short-term trader. It's probably better than volume because it actually kind of shows you in the past what the average true range of the coin was. And volume, you don't know when volume is going to spike, but you can actually see when the average true range starts getting larger. You start to know that volume should be increasing right behind it. But I digress. All right, so anyway, I want to show you this, and I want to show you the 2050 EMA. All right, I'm going to put that up right now. We're holding well above the 20. Now, on the short term, we said that we could get a pullback back down to 99, potentially even like 97 or 95,000. I'm actually hoping for this. I'm actually hoping that we get a pull down in between these 2 points, like say 97.5, 98,000. Why? Because we do need to break above that 106,000 that we've been talking about. So I would like to see us, come down a little bit before we could actually spike up above that 106. All right. Now, what we're thinking is we'll get triggered at our 107, 100 target, and then we'd get a pullback back down to guess what? That 102, 500 that we've been talking about, which is the high days close. That's an important level. We've been holding that level. We've been, playing around but we haven't broken down. We haven't broken up yet. The market basically is coiling. So I want to take you out to a monthly chart, all right, where we did a little bit of work on the monthly. All right. We got a massive inverse head and shoulders developing. Okay, the left shoulder occurred in 2021, right in here. Okay, then we had the head forming back during the bear market of 2022. Now, right now, the right shoulder is forming right now. It, this pattern confirms that we're looking at a measured move projection to 200,000. You heard that right. 200,000 isn't a meme anymore. It's on the chart. It's here. Now, of course, it's going to take time to develop. It's not going from here to 200,000 in 15 minutes. You know, there's going to be a lot of to and fro. Once we break that 100 and say 9,500 and 110,000, we're looking at a rally potentially to 118,000, I believe, with a pullback back down to the 109,588. The old high. That's a classic development that generally occurs in bullish markets. Price, you know, if the price expands, then it has what's known as a natural reaction back down to where the old high was that uses it as support, and then finally breaks up through the 120. That's, you know, what we're looking at right now. All right. I want to switch over to the 2 week, and I want to talk about Bitcoin versus gold. All right. So here we got JP Morgan jumping in. Now, I rarely agree with the suits. I worked on Wall Street. I saw a lot of idiots. However, right now, JP Morgan is basically signaling their position. They're letting the world know that, hey, we're going to be going long Bitcoin. Now, they've probably been accumulating quietly. So I'm sure they have coin. Now they're probably just waiting for a breakout. But whenever gold stalls out, let's get back over to that gold chart. Is that my gold chart? Yeah. Whenever gold stalls out, especially after strong rallies like we've been seeing in gold, capital starts to rotate into Bitcoin. Gold's been hot, but it's starting to consolidate now. And every time that happens, Bitcoin picks up the slack. It starts moving higher. Why? Because major funds and major investors are always in seek of alpha. If gold, you got to remember, gold is a non-interest bearing asset. Gold basically, it costs you money. If you have physical gold, lots of physical gold, it costs you money to store it. Okay, you're not getting anything for it. You just need an increase in the asset in order for you to, retain, get any type of return on your money. So the ROI is really important. So once they see gold start stalling, they're going to jump into risk assets like Bitcoin, Ethereum, and all the other, favorites, XRP is in the spotlight, all those guys. So that's the flow. Money doesn't, leave risk assets. It just rotates. So watch that Bitcoin gold ratio. It's ready to start to break out. So I want to take you over to what I promised here. I want to talk about a bull run meter. Now, for those of you that are new to all this, a bull run meter is in Bitcoin is a visual tool. It attempts to measure how deep or far along we are in a Bitcoin bull market. It's not a standard technical indicator, but it's rather a composite gauge using various metrics to assess market sentiment, momentum, potential upside left in the current cycle. So think of it as like a fuel gauge or a progress bar for a Bitcoin run. Now, if I go over to 2017, these are the phases. All right. Like one was the blow off phase. So you had from the top, you come down. This was the blow off phase. This was basically, another reaccumulation, kind of like a Wyckoff accumulation. You could say there was a spring that occurred up here. And then you get to phase two, which in the bull run meter is, early. All right. It's early. It still has a potential to actually break back down into the blow-off phase. But once it breaks this, it goes up into what's known as like a mid-bull run. It's not completed yet. It's not completed, okay? And then you get into 4, which is an accumulation phase. And then you get the spike up in 5 to the late stages of the bull run. And then guess what? You get the retrace again. Now, if I'm going to also take you back we're looking at really, if I was to expand this out into an Elliott wave, we're seeing the exact same, fractal unfold. The DAX peaked in late 2024. It's now turning down, and guess what? This is the bull run meter isn't as long as an Elliott wave. Now, in Elliott wave, I would say that we're really in wave three. We're like kind of maybe one quarter to one half of in wave three, which is the strongest part of an Elliott wave move. So really, if I was to move this, I would say that this was basically the beginning of wave three for Elliott wave, and then the marketplace rallied up. It's still in wave three because the only way wave three breaks is if you took this top out and came back down into it. It's not. It didn't do it. It just basically kept going. So this is wave three. We haven't even hit wave four yet, according to Elliott wave theory. Now, I just want to throw that out there because if it plays out like in 2017, wave five could be well north of 180,000. All right. So, and then of course you got an ABC correction and also a continuation of the potential move up higher. So that's what we got going on that pattern, like I promised you. So let's move over to, where's my notes here? I got to look at my notes. I want to go over Ethereum real quick because I don't want to leave Ethereum out of the equation. So I want to come on over to Ethereum. And what we're seeing right now is post-Petra upgrade, we're seeing increased network activity. Stalking continues to climb, and gas fees have stabilized. They're extremely low. So technically, Ethereum is pushing a bull flag breakout right here. All right, so we're waiting. Now, we talked about Ethereum. It basically, I believe that it has to get over 2,800 to actually spark this. Now, after 2,800, we can get a pullback maybe to 26, 25, maybe. A breakout of 3,000 confirms 4,000. A break of 4,000 sets us on the way to the $10,000 target. So, I mean, we got a lot of stuff going on here. We got a target, like short-term target around 3,200 to 3,400 short-term. Now, if we looked at Ethereum, Bitcoin, cross kind of, we're holding long-term support. If it holds, we could see Ethereum start to outperform Bitcoin in the coming weeks ahead. So Ethereum, hasn't had its momentum yet in the cycle, but trust me, it's coming. So before we leave, we want to look at fear and greed. Completely nowhere near any fear of, people are going to come in and sell. We want to look at the bull market peak indicators. 0 out of 30, and of course the Bitcoin funding rates, which are still extremely low, showing that the marketplace is still not really involved. I said the liquidity up here, the knuckleheads put their stops right at 105, and Bitcoin always gravitates to the liquidity. But before we go, crew, I want to make you aware that you can click this link right here. You'll be taken over to this site where you can sign up. Totally free to join. We'll be dropping insane alpha and trading opportunities daily, from breakouts to long-term gems. We got you covered. Merlin just came in second in Bitcoin and altcoin trading contest. Wish him congratulations on that in the comments below. Jump into this, man. We want to help you out. We want to hear your thoughts on our analysis. Put that in the descriptions below. You want to trade with a solid broker? Make sure you click right here for Weeks. This is our trusted broker, low fees, fast execution. We actually have a trade on right now that you can follow. If you come on over to Weeks right there. Once this thing loads up, takes about forever to load up on my screen over here. But you can come on over. You can join us. We got a trade that's on. We got the nads, man. We put the trade on. So we did. So join the crew. Level up your trading. Make sure that if you're going to trade, jump in on our trusted broker Weeks, and don't forget to come on over I wish that there would be a chart up here, man, before I leave the screen, but I don't have time for this. Like I said, I got the Palpatine rush. Make sure that you come on over to X, follow us on X, where we talk about Bitcoin, crypto all day, every day. And remember, always trade with your head, not over it. Do your own research. These are just my personal, humble opinions of 35 years of technical. Well, yeah, 35 freaking years, man. Wow. Anyway, uh, make sure that you trade with your head, not over it. And also, as a short term trader, enjoy the party, but dance near the door. Cheers.